Dadcam. What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. And I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. And this is the home show where for 7+ years we've been providing folks like yourself education and options. If you're new, welcome to the Gumbo Nation. Hey, if you want to join the show, 504-260-0995 or shoot an email to info@mortgagegumbo.com. Today on the show, we address that, let me figure how to put it here, the elephant in the room, and that is mortgage rates. The Fed spoke this week. We'll break that down, and we'll talk about, it's going to be, I don't want to say it. Listen, it's going to, I know me. And if you've been listening to the show for any amount of time, and I know there's a lot of you out there because I see it in the numbers and the ratings. But what I want you to understand is this. It's going to seem like today a little bit of a lecture. And that's okay, right? That's okay, because we're going to break down interest rates and not so much what the number is, but we're going to help you navigate through it. And I get lots of questions during the week. And if you want to send a question, if you got questions about interest rates, 504-260-0995 or info@mortgagegumbo.com. But rates have exploded, and I have the numbers to show that. I don't think this is anything that people may or may not be aware of. But I know, as most of you who are listeners, but I get dozens of calls, and everybody, you know what they're all saying? Well, I want to hurry up and do something before the rates go up. And that tells me maybe, knowing the difference between a federal funds rate and the Fed speak versus mortgage rates. So now that the Fed, for the first time in 3 years, has raised rates, now I'll be able to give you an idea, because in most of your minds, it's been a little bit mythical, right? Oh, rates are going to go up. Sure. What is that? Many of you have no clue. I mean, it's been sitting at zero forever. What is a margin? What is all those things? Well, we're going to talk about them today on the show. And I always kind of like to, it's like a show that you do, or a show on TV. They got to name the show something. So yesterday when I was sitting here going through like, all right, hey, here's what I want to talk about. So the name of this show is kind of like, I put rates are up, now what? Because I can't use profanity. But you know what? We don't have to. People who are all about rates and rates driven don't know, and that's fine. I'm okay with interest rates going up because it's going to get some of the smuckatellis out of this business. It's going to get some of these folks who are being taken advantage of because they don't know no better, who that's all they know how to sell. And that even includes realtors. And I'm not afraid to say it. And I work with some great realtors. That's the one benefit this show has done for me. Because you come to me and trust me, each week several people call me and go, can you help me get someone to list my home? Can you help me with the financing? And also I want to take advantage of the Total Home Authority with the inspector, the insurance, getting some stuff fixed around the house. Oh, a realtor as well. I need somebody to represent me. And the reason why you need this is, I had a client and they wanted to go for rural development. And the fact is, they didn't qualify. They did not qualify for rural development. So they were upset, but we told them you could go FHA. Well, they didn't like that idea, right? So he don't like the answer. So goes to a realtor, right? And that realtor goes, well, hey, I got somebody that could get you approved. So he goes over to this other person. They don't do a true qualify. You hear what I talk about. They don't vet them. They don't really do an approval like I did. And they go, yeah, that's fine. You're approved. So I look up this realtor. Fair amount of business. And this is what scares me. And these are the folks who just, they don't know. And you know if you listen to the show, so if your realtor's joining this show and you're like, oh, this dude does his hate on. No, I don't. I talk on this show all the time about the importance of a realtor versus selling a home on your own and how valuable realtors are. But some of you, quite frankly, just don't know what you're doing. So this realtor sends to their person who, one smuckatelli to another. They write a contract. This client, he puts up his $1,000 earnest money. He orders an appraisal, pays $550, does an inspection, another $550, and guess what? Guess what happens? The old underwriter. The underwriter looked at it, and they don't like it, blah, blah, blah. It's not the underwriter. It's the lender. So 3 days before they're supposed to close, the old underwriter says, I'm sorry, you don't qualify for rural development. Told him this 45 days ago. So who loses? The realtors lost nothing. Time, right? Blah, blah, blah. The lender has lost nothing, except probably should be a little self-respect because you don't know what you're doing. But you know who lost? This buyer. This buyer lost, as I told you earlier, $1,000 earnest money, $550 on an appraisal, $550 on an inspection. Do some quick Chalmette math there. That's $2,100. That $2,100 could have went towards his closing his down payment on an FHA loan. So he calls me and with his tail between his legs, but I give him credit because some of y'all, when I tell you, hey, I can't help you right now, or here's the program, after y'all use some profanity towards me and tell me, hey, you don't do what you say you're going to do on radio. Well, I can't go over every scenario on radio, and you left off that you're bankrupt or whatever the situation is. He calls me with his tail between his legs. Here's the problem. The rates have skyrocketed. So what was once a rate of 3.5% is now 4%. Now, luckily for him, hey, he still budgets for the house. Everything like that is fine. And I understand. There's nothing wrong with getting a second opinion, right? Nothing wrong with that. Hey, you need back surgery. My mom's like, I'm going to go get a second opinion. Then when that person says, yep, you do, then you figure out who you want to go with. So I referred him to, he goes, yeah, I want a new agent. So then the old agent calls me, who, keep in mind, wanted to take the business from me, asking me why I did that. I said, well, you recommended he go with somebody else who didn't know what they're doing. So everybody lost here? No, everybody didn't lose. The client lost. And it's you. That's most important. And the reason why I'm telling you this entire story is you have to vet your realtors. You have to vet your lender. I don't claim to be the smartest guy in the world, and I don't have to be, because if you've seen me, you know I got sexy on, and you know what I bring looks-wise. So I got GQ to fall back on. GQ's always looking for hot, bald-headed, stocky, big-boned models, right? No. So you know what I do? I use my resources, and I get people pre-approved. I let my investors say, hey, Dwayne, you know what? I want to buy that person's loan. It's a house, folks, not gumballs. And in these type of waters that we're going into, you have to be able to handle that. So you've got to know what you're working with. Another story this week, somebody comes to me, the realtor had no idea about closing costs, that they could ask a seller for closing costs. That's what's been going on the last couple years. How many thousands of dollars have this realtor cost their clients? That doesn't sit well with me. And I'm not bashing. These are facts that I'm using right now. So now more than ever, as we get through this, the reason I tell you this story is it's important that you find yourself a mortgage advisor. Rate Watch is brought to you by Tito's Handmade Vodka. It's America's first handcrafted vodka, and it's oh so good. And hey, when you hear these numbers, you might be like, you know what? I need one. Mix in a little Bloody Mary or something like that. 30-year conventional. 2 weeks ago, I said 3.96. You know what I'm saying today? 4.46. 4.5% to 5% rates are here, folks. Embrace. They don't scare me. And that's why I'm going to help walk you through this. 15-year was 3.33, is now at 3.84. Last week it was 3.54. It's up 30 basis points. FHA was at 3.50. That's now 4. It's up a quarter from last week. Jumbo, 3.50 is 3.93. 5-1 ARM, 3.63 to 3.82. That's an adjustable rate mortgage. Well, that's lower than 4.46. Yeah. The old adjustable rates are out there, folks. They're out there. And then VA, hey, mid to upper 3s. So, look, we're gonna address the elephant in the room. We're gonna talk about that. As I think it's important that we let you know, hey, how are we going to navigate? Like, so what are you gonna do? Or you just done, right? Like, I'm gonna wait. I'm not buying a home. Okay. Last month's year-over-year jump. All-time high for renting. 15%. Rents are up 15%. A couple weeks ago. Hey, and if you want to catch all my past shows, go to MortgageGumbo.com, click on past shows, or even easier, go subscribe to Mortgage Gumbo TV. And then you get all the updates as the videos come up. And now we even have chapters. How great is that? Now we have not only can you watch us on the social medias, and right now I'm inside with the green screen, I'm inside the Brady Bunch right now. I love these things, man. I just have fun with them all week. That's my biggest decision sometimes I got to make. Cindy's looking over at me. Bobby. Marsha, I see you checking out the top of my head. But you know what other number's 15%? Home appreciation for 2021. And if I had hair, I'd be scratching or pulling my hair out right now for folks who are thinking, who say, I'm just going to wait. Because what are we really waiting for, right? What are we waiting for? And it caught my eye. Dwayne, I was offered an adjustable rate this week for 3.5%. What is your thoughts? The fixed rate was 5.25%. Now I could buy more house. Here we go. It's coming. And this is what, start sweating soon. Turn my loop. Fan on. This is a perfect example, folks, and where fallout's going to happen down the road. Because now, what are you going to do? They're building bigger homes, right? So go get that adjustable rate, and now you can buy a bigger house. It's fool's gold. So here would be my answer to you. Guy's name is Tommy. How long is that rate good for? Because here's what you're going to get with adjustable rates. It's called the teaser rate. And I would assume that is a teaser rate probably for a 6-month period or something like that. What is your margin? See, these are all terms you're going to have to learn. And for years, I've been telling y'all about this. Years. See, now you got to learn all these new terms. What is your margin? And then keep in mind, the Fed just spoke this week and raised interest rates. And it's saying at least more hikes are coming. And I'm going to let y'all know on the other side of the break what those hikes mean. But when you look at it, what you need to break down is take away that initial teaser rate, and you need to go look and see what is your rate going to be with your margin, and then what is your payment wind up being, what your escrows, what all that other stuff. And when you go, it's going to be lower, well, is it interest only? Right? They're going to throw out something where they're going to put it on a 20-year ARM amortization or a 30-year amortization, and that payment's going to look good. But what's going to happen down the road? Does your house look sickly? Look, folks, spring's here, right? The plants are out. You go by home, the pollen, your car's destroyed every single morning. Imagine the beating your house takes on a daily basis. Mold, mildew, grime build up over years. Over years. Your home has taken this just abuse from Mother Nature. Let's give your home a checkup. Call the doctor. Everybody's a doctor these days. Call the doctor. HomeShineMD.com. They make house calls. Restore your home shine and protect it. and give it the facelift she deserves. Walk outside right now. Go look at your roof and look at how stained. Do you even remember the color of your shingles? Look at that mildew, that grime, soffit, fascia, driveways, sidewalks, stucco, brick, wood, you name it. HomeShine can fix it. Give your home a facelift. Visit HomeshineMD.com. And when you talk to the owner, tell him Mortgage Gumbo sent you. It's time for us to address the elephant in the room. And I told you this may be a little bit of a lecture, but here's the bottom line. Rates are up. They're not going anywhere. So the reason you listen to the show is to get education and options, right? So we have to understand 4.5, 5. Hey, that's there now. You could still buy a point depending on credit and different things like that where, you could challenge a few different things, but 2.5, 3, it's over. It's over. So let's get it through our head. We have to accept it first. So really, I want everybody to kind of say it with me. Rates are up. So what? Rates are up. So what? We're not throwing home ownership away. We're not doing any of those things. What we're going to do is teach you and educate you on how to still get that home and win. And the rates are staying up. Why? Well, inflation's at 8%. It's not going anywhere. One more month of these reportings, and now you're going to hear the word recession. That's not good. So the only way to slow some of these things down is raise rates. So the Fed raised rates 0.25 this week, Powell. 0.25%. That's the first time in 3 years. And they're expecting plenty more rate hikes. So for the 1 millionth time, let me understand. Federal funds rate, when you see these folks talking and you call and you go, hey, I want to do something before rates go up. That's how I usually know it's a new listener or somebody was referred. Because the ones listening to me understand what's going up. They go, hey, I know. The ones that listen, like you folks, they call me and go, hey, I know rates are up, but I'm now ready, or I did what you said. I got my credit corrected. I'm now ready to go. So, again, rates are up. So what? Here's my quotes, professional thoughts on this, okay? And I've been in this business 30 years. So I've seen rates a heck of a lot higher than where they are right now, folks. So here's the approach that I want you to kind of just sit back and think about it, all right? Instead of thinking, hey, I missed the boat, right? In reality, rates are a number on a piece of paper. In reality, how many of you have ever gone to the grocery store and brought bread, milk, and say, hey, I'm out of here. I got 3.5% or 2.25% on my interest rate. And they go, oh, man, that's awesome. See you later. Nobody. How many of you watch TV and on the bottom of the screen have you ever seen number on a piece of paper sells loan or buys a home? It doesn't happen, folks. So there's much more to it. The rate is simply your payment. What's more important is, where's your credit at? What's the right program based on what I qualify for? And you got to say it with me. What I qualify for. Not what Dwayne can get me. Not what Mortgage Gumbo can do for you. It's what do I qualify for? What is the decisions that I've made up to this point get me? The number on a piece of paper is just something that gets plugged in to help come up with a payment. Of course you want that number to be the lowest. Of course you do. And that's why some of you right now might get 3.5 to 4%, while others might be getting 5.25. What is the end goal, Gumbo Nation? What is the end goal? Now, for you who are listeners, you're lucky because you understand this. You understand that while I just mentioned rents are up 15% year over year, so are mortgage appreciation. So would you rather be paying rent at a 15% more clip or get 15% appreciation on your home? what is the goal? Not goal, geez. What is the goal? And I'll sound like Chalmette a little bit sometimes. That's what we have to work towards. That's why we do the pre-approvals. That's why when you do an application with us and you go start it online and we call you, we ask more questions than the normal lender. You know why? Because your normal lender that got into this industry over the last 2 years, they're order takers. They're going to be back at the fast food joints. They're going to be back at those places in the next couple months. Whereas folks who know how to charter through this and who have the programs and the ability to get you in the home and say yes, like Mortgage Gumbo, Dadcam, we will be here. That's what SnapSend and Save Dadcam is about. So you have to understand interest rates are up, so what? Ask all the boomers right now who paid 17, 18, 20-something% interest rate. They're the richest generation ever and have more equity than ever, which is why we're doing more reverse mortgages at Mortgage Gumbo than ever. Because they're going, you know what? Give me my money. Now, what does this Fed hike mean? Like we discussed. Hey, you might see a little bit more money. Maybe we'll quit seeing free checking, and they'll be able to give you a little bit more money on those savings. I get that the rates going up is going to have an impact, but it doesn't mean we just take our ball and go home and say, I don't want to play anymore. On the other side of the break, we're going to break down purchases. I'm going to give you some tips on how we're helping folks still get the same size home. We're going to share that with you. Now more than ever is why you need a valuable realtor. Just got a question over on Facebook. Do you believe rates will ever go back lower again? Or will the rates get comfortable to a certain point of being high and stay there? It depends on what you think low is. To me, who bought my first house at 8.75, I don't think this is high. To the people that I'm refinancing right now that are at 6.25 and 8.125, or to the folks who are taking out money to pay off credit card debt that's at 22%, they don't think this is high. It's all relative, folks. It's all relative. It's a number on a piece of paper. That's it. So say it with me. Rates are up, so what? Then you go to SnapSend and Save Dadcam, and you get the answers that you need for free with no high pressure, no sales speak. It's chatting. So let's talk about, hey, how do you win in this environment, right? So let's sort of break some things down for you. And I just got a question over. I'm thinking about building a home. What is your thoughts on new construction? Man, that is a great question. If I can get to it at the end, I will, because I want to talk about to the masses right now, to the whole Gumbo Nation. Hey, thank you so much. Somebody just said, first-time listener, this show is amazing. Where have you been? And it's a lady. Hello there. Hi. How you doing? All right, purchases. Conventional. How do we win with a higher interest rate? Simple. Less down payment and buy out your mortgage insurance. Less down payment and buy out your mortgage insurance. If it's your forever home, hey, when you get enough equity, if you want to refinance to get some cash back or something like that, great. Home values are going to keep going up. Are they going to keep going up at this clip? No. But home ownership's for the test of time has always been a great investment. How many of you are in your homes right now that even in 2009 when poop hit the fan, you rebounded? And look how much equity you've got now. So, again, and here's the problem. Most lenders don't tell you this. Most realtors don't know this. What do you mean, buy out your PMI? They don't even know what seller paid closing costs is. And I don't mind that, and that I expect them to know. They don't have to know about the PMI, because the realtors I work with, I tell them, you handle the brick and mortar, I'll handle the financing. And every realtor, I tell the same story. And listeners, you know, you tell that realtor, look, you got to sound cool. Well, I'm looking at 300, 350. Here's about how much I make. I tell all of my realtors the same thing. You get to see them when they made up before the prom. Me and my team as the lenders, we got to wake up next to you the next day after a night of drinking and sloppiness. And we got to still love you. And we do. And we put it, we hold your hair up. We help you get to the toilet. We help you do whatever you got to do to get you well. So on a conventional loan, less down payment, buy out some PMI. Hey, maybe you'll recast the loan later on down the road. There's a new term for you. See, those are the things that I know that others don't. That's why it's so important to know who you're working with. VA, minimal effect. Still no money down. Still got the lowest rates available. Let's take a $250,000 loan. 3% last year on a 30-year term. Your payment was $1,055. Let's throw out 4% now. 30-year term, that same $250,000, $1,193. Well, heck, Dwayne, that's $139 a month, man. It's a lot of money. No, you know what that is? That's $1,670 a year. That's a lot of extra money, Dwayne. Well, you know what? Let's say your house don't appreciate by 15% like the average was nationally last year. And let's say it only appreciates 7.5% this year over the next year when you buy your house. That's $17,000 in appreciation. So in 1 year, you'll make 10 years of that 1 year of appreciation is going to make up for 10 years of increased payments. So again, tell me why this is bad. 1 year, folks. You're going to make enough appreciation to cover 10 years of that payment increase. RD, listen, on this program, it's income-based. It's qualifying income, qualifying credit, and no money down. And the rates are still very competitive. But there's not a whole bunch of negotiating power here. You're coming to the closing, and if you close with me, you're getting a check back at closing. So you got to kind of, be thankful that they have this program out there. And if you want to win, FHA loans, you've heard me talk about them in the past. When to use them, how to use them. Well, now, hey, especially if you're not sure if it's your forever home, you want a lower rate, look at FHA. FHA rates are lower. They're lower by 0.5%. So put down less money. Yeah, you got a little bit of PMI that's on there, but it still beats renting. And your payment's still going to be cheaper than renting. And then as home values go up, you refinance it down the road. Or you go, you know what, hey, we're going to keep that as a low starter home. We'll use it as an investment property. So listeners, you got to be able to, rates are up, so what? This doesn't intimidate me. In 30 years, I've seen several of these sort of, come back around, whatever the word is I'm looking for. But this has come about several times. The past repeats itself. But now's not a time to walk away and go hide in a corner. Now's the time to take advantage. And then refinances, if you call me, don't be like, oh, that rate's hot. What I'm going to ask you on a refinance, and I had that question, is, where were you the last 2 years? Well, I couldn't refinance because of a bankruptcy. Then why are we talking about rate? Let's help you take advantage right now and go get rid of that $60,000 in credit card debt that you got at 24%. And those personal loans at 15%. Go out. Share what you've learned. Let's continue to grow the Gumbo Nation. That's your homework this week. Go tell one person. And go subscribe to Mortgage Gumbo TV on YouTube. Till next week, Gumbo Nation!